Hello guys, welcome again to this session. In this video I'm going to be documenting about 5 different set of currency pairs or trading pairs that move in the same direction. Normally the purpose of me that I'm documenting these videos is because I see many traders in one trade they are going long, in another trade they are going short. So the problem is that I don't want to see traders that they're selling at one point and another point they're buying currency pairs that have to be in the same direction. For instance, if it was a buy, we have to place buy with those same currency pairs, and if it was a sell, we have to place sell for those two individual currency pairs. And also it will help you to analyze your individual currency pairs better. So for this video, for you not to miss my upcoming video, if you're new to my YouTube channel, let's say you have 5 seconds to hit my to smash the subscribe button. Let's go. 1 2 3 4 5. All right, it was for you not to miss my upcoming videos. And if you're not new to my YouTube channel, trust me, I'll keep documenting wonderful videos like this so you'll be profitable. All right, so the currency pair I have come to my watch list here. In my watch list I have selected some kind of trading pairs that I would like to document here. Before that, let me just explain to you what you see there. You see the currency pair that is GBP USD. You have Euro USD, you have ZOS USD. The first currency per GBP USD is a Great British Pound versus US dollar. The second Euro USD is a European currency versus US dollar. And you have ZOS USD is a gold versus the US dollar. So in each of those currency pair, what you see, GBP, you see Euro, you see ZOS, all those individuals pair of part of the currency pair is what we refer to as base currency, and the USD that comes after is referred to as core. So each currency pair has a base and each currency pair has what we refer to as a core. So let's take the first aspect of Euro USD. If you click on Euro USD, this is what we are going to have as our chart. So we have a chart like this. What I want you to understand is the direction of the market, how the market moves. So it is very simple. I'm using some trend lines, some arrows to illustrate the market. So basically you see this market, the market has been uptrend, the market has been an uptrend. I'm analyzing this market on a 4-hour time frame. The market analysis is done on a 4-hour time frame. So if I bring this aspect at this particular point, you're going to see the market direction. The market direction was uptrend. So generally, if you were trading Euro USD, the market direction should be at this particular point. I hope you understand. That was the direction of the Euro USD. And just to confirm that if you have this, let me bring it from here. You are going to have this structure like this. So basically you see the market structure. The market structure is an uptrend. This market structure was an uptrend. So for you to be profitable, you have to be looking for trading opportunities in the upward direction. For you to grab everything, you stay tuned and you will grab everything. However, that was for the Euro USD. Let's see what comes with the GB USD. The GB USD is a Great British Pound versus US dollar. If you click on it, this is what we are going to have. We're going to have something of this nature. So this is what we have for the GB USD. You see you see the market structure for the GB USD is almost the same like that of Euro USD. And if I bring in that same helping market part for you, so you understand better, you see the market direction is uptrend. The market direction was uptrend. It was a bullish trend, and you can understand that better. The market structure, if I want to bring a market structure here, if I want to insert the market structure around this particular point, the market structure was also a bullish trend. So you see the market structure was a bullish trend. You observe, it means that for this currency pair, the Euro USD dollar, the Euro USD and the GB USD moves in the same direction like the Great British Pound. This is what we are talking of. For you to not to miss what I'm talking of here, what I'm talking of is this is what I'm talking of. You can understand this what I'm talking here. This is what this currency pair. You see the British Pound, that's the British Pound there, that's the British Pound versus the US dollar as written as you can see. Then the British Pound versus the US dollar. So we're comparing strength of the Great British Pound with that of the US dollar. That is what we are doing here. That's the forex trading. I'll be documenting videos on how to trade one and how to do with other one when is another trend decreases another one, what happens when a trend decreases, and what happens when another trend increases. For instance, if the British pound is decreasing, what will be observed, and if what the US dollar is increasing, what will be observed. For the purpose not to make the video so long, I will be explaining that in another video. This was just for you to know the direction of the market, so you can be profitable. I hope you understand. So this has gone to what I don't want, but I'll come back. Yeah, let's take the third currency pair, those USD. Normally, if you take those USD, those USD also move in almost the same direction with that of the Euro USD and GB USD. If you understand better, so you see the market structure. The market structure here, so you see the market structure is almost the same thing with what we were observing initially. So the market structure is almost the same thing. The market structure is almost the same thing. It's an uptrend direction. You can observe an uptrend direction, right? As simple as that. So what does this has to say? It simply means that if you are a trader, if you are trading forex trading, remember you are here. Let me bring it back here so you can appreciate it. Let me bring it back here, but however it's okay. Since it's having some kind of things here, it's okay. Let me bring it back this way so I appreciate this way. So what I want you to understand is that forex trading is all about analyzing market. That's goal, and that's goal. We're analyzing gold versus the US dollar. That's what we're doing here. Analyzing gold versus the US dollar. That's what we are doing here. You can observe, right? So what I'm trying to let you know is that since this currency pairs normally, since this individual, let's go to our watch list. Since this individual currency pair, normally this individual currency pair, the first being GBP USD, second Euro USD, and those USD. Since you have already seen the trend, normally the trend is as you can see, the trend is an uptrend. It's a bullish trend. It means that if you're in the market, if you are trading this currency pair, you can come and look for trading opportunities in the up direction. Or if, for instance, if your confirmation in the GB USD is not confirmed, you can come and confirm the Euro USD, or you can confirm the ZOS USD. This currency pair moves in the same direction, so it doesn't make sense for you to go and be selling GB USD and you come to Euro USD and you're buying USD, or you're selling Euro USD and you come to gold and you're buying gold. It doesn't make sense. If those three currency pair are buying, all of them has to be buying, and if those currency pair are selling, all of them has to be sold. So I hope you understand. That's what it means by currency pair moving in the same direction. So this second category of currency pairs that I would like you to understand is this second currency pair that has USD as the base now. Yeah, this one I will be talking of USD USD card, and I will talk of the dollar index that will talk of DXY. So normally USJPY, if you click on the chart, normally, well, this is what we're going to see. The chart is different from the other ones. So you see the chart here, has the chart here the chart here is a bit different. So you see here is instead a reversal of what we saw up there. So here the market structure was generally, before it started retracing up, generally the market structure, generally it was on a downtrend generally. So generally the market structure was on a downtrend here. Yeah, the market, it was normally on a downstream here before the market structure change. I hope you understand. So there it was normally on a downtrend before the market structure changed and went up. So that's what I'm going to see. So this one was actually on a downtrend. They changed the market structure. Yeah, they changed the market structure from this. It's where there was a kind of a big change in market structure, a change in market structure from this particular point. I will explain a video that will talking on market structure analysis, so just don't bother. That's a video that I'll program for another video. Understanding market structure. Yeah, there's a change in market structure, but generally the overall trend there was a bullish trend, a downtrend. I hope you understand. We're talking of the USD JPY. So this currency pair normally, if that currency pair with a card currency pair will normally move in the same direction, so we expect them to have the same kind of move. we expect them to have the same kind of move. If you what you should be doing, that you should be observing this part, these moves here. There's a move I want you to be observing. This is what we are dealing with. This is what I do. Now we're on USD card. You should be observing on those moves. We are on USD card now. So that we're on USD card moving the same way like our initial USJPY. And if you want to understand this, you are going to believe with me that the market structure was generally, this is a market structure somewhere around here. I mean the direction of the our market normally it was on a downtrend. Normally it's on a downtrend normally. How you understand? So the direction of that market is a downtrend. So if you were to trade this currency pair, you have to be looking for trading opportunities on a downtrend direction or on a downside. We say it is the market is on a bearish trend. That's the right name to use. And the third category, I'll take the DXY. DXY is a dollars index. Automatically, if you are trading a dollars index, you should know that the dollars index moves with USD card, it moves with USDPY, and it moves with USD chef and the rest that I will not say in this video, not to make the video so long. So normally this is what we have here. So normally this is what we have. I'm going to put this. So normally this is what we have here. So since we have this, and it resembles like the one we had in the initial ones we had. This one is easier because it's some of the same structure like what I'm just explaining. This is the dollar index DXY. So you see the dollar index DXY is almost the same way, moving like the currency pair, that moving like USD card, and it's also moving like USJPY. Just to take your attention that we are on the US dollar index. The US dollar index is a currency pair that describes the power of the dollar, how dollar moves, whether dollar is weak or dollar is weak. There are criteria that you have to do when it comes to when the dollar is being weak and when the dollar is being strong. There are criteria that you take of the advantages that you do take of the market. I hope you understand. So generally, if you want to classify this, it means that we are done with GB USD, Euro USD, Zos USD. We also trash USD GPY, USD card DXY. So a third category of currency pairs I would like to be documenting in this video is currency pairs that have the Great British Pound versus CAD CAD. CAD is a Canadian dollar, and we have Euro card, the European currency versus the Canadian dollar. Normally this currency pair also by definition will be moving in the same direction, so I'll not take much time here since I've already explained to you the concept. Very well. This the Great British Pound versus the Canadian dollar. So normally you see by definition this one is clear. The market structure is clear. So the market structure normally was an uptrend. That's it, as simple as that. I will not take time and explain since I've already explained to you what you have to know. And remember, we're talking of the Great British Pound versus the Canadian dollar. As simple as that. So we have to see on the the Euro card. Remember, the euro there is a base and card there is a cord. So we are going to have this currency pair in this way. And you see the market structures is almost the same as what we have earlier, right? Like this. That's the market structure. If I want to bring this one down here, it will be something of this nature. So the arrow, let me try to arrange it so you appreciate all. So that's the market. So that's the trend. The trend is uptrend. So it means that if you are trading euro card and GB card, they have to be in the same direction. Or if you're doubting your analysis in a card, you can come and confirm. If you're doubting your analysis in euro card, you can come and confirm your strategy with GB card. That's it. Euro card. That's euro card. If you're doubting your strategy in one, you can come and confirm your strategy in one, because forex trading has no feelings. It's either you are on the track or you're out of the track. So the next category of currency pairs that we're doing here is the Euro GPY and GB GPY. Normally the European dollar versus the Japanese yen, and the Great British Pound versus Japanese yen. These currency pairs also are going to move in the same direction. As you can see, let's see, normally they have to move in the same direction. If you understood what I've been seeing so far very well, you see the market, you see the direction is You see the direction normally here initially, the direction is an you see the direction is an uptrend direction. That's the direction. The direction is an uptrend direction. I hope you understand. And for you just to throw more light, that we are dealing with this currency pair, the European currency pair versus the Japanese yen, the Japanese currency. So let's take the same category. Under this will be the GBP JPY, which also has to be in the same direction like what we have been observing. So this is what we have here. As simple as that. You see the direction also is an uptrend direction. So you see the direction is coinciding. If you don't know these directions, for you it'll be difficult for you to trade, because you may be buying one and the other one you are selling, which is wrong. So if those currency pairs that move in the same direction, they are very important, because they will help you to buy all and help you to confirm your sale upon those two trades. I hope you understand. You see the structure is uptrend, uptrend, uptrend. So I will take the last category of currency pairs. This currency pairs is the Euro or AUG and GB AUG. Euro, like you know, the European currency, AUG is the Australian dollar, and GBP or AUG is a Great British Pound versus Australian dollar. Normally, this currency pair also has to move in the same direction, since they have the same base. But since they have different bases, but they have different bases and the same cost in simple terms. So this is what we are going to be having for this currency pair of this is the currency pair of Euro AUD. Oh, let me begin by first of all, for instance, let me bring in Euro. Yeah, we're talking of Euro AUD. For maybe if I put that way, you understand better and see the market structure has been in an uptrend. I am analyzing on a 4-hour time frame. Any time frame can be good for trading, depending on your strategy, depending on how you master the trade. I hope you understand. So you see, Euro AUD has been in a fantastic uptrend. The purpose of this video is for you to know the direction of the market, and like I said, I will be explaining market structure in another video. And the last currency pair from Euro AUD, I will take GB AUD and see how the trend may be. So this is what we have to do. Guess what, guys? The trend has to be the same. It's normal. If you have to understand this aspect, because if you don't understand this aspect, you may be trading forex and you are just making losses all the time, because you're not trading what is needed. You're trading wrongly, you are analyzing the market wrongly. So understanding this concept will help you better to analyze the market better. Analyzing the market better will render you profitable. So you see the market structure, that's the market structure, that's it, that's how it goes. So guys, so I'll be uploading very important videos of this caliber, and I'll be explaining to you how to use some structures. It's true, not to make this video so long, I will not explain all that in this video, but I will be explaining that with time. So I know this will make so much sense. If you like the videos, click the like button, subscribe, share, leave a comment in the comment section. Let me know. And if you have any worry on the type of video, or if you have any problem for trading, you can drop a comment in the comment section and tell me the particular type of video you want me to upload, and I will just upload that any moment from now. So that was it for today. Subscribe, share, see you in our upcoming video. Peace out.